Hello, and thank you for joining us. On behalf of Aurora Mobile's management team, this is our earnings update for the first quarter of 2026, the opening quarter of our new fiscal year. In the next few minutes, we will walk through our business highlights and our financial results. We will start with the business highlights, the momentum in our global products, our expansion into new markets, and the new products we brought to market this quarter. EngageLab, our global flagship product, had a standout quarter. Revenue reached RMB 24.1 million, up 210% year-over-year and 31% sequentially from RMB 7.8 million in the same period last year. Customer numbers grew to 1,864, an increase of 120% year-over-year. And annual recurring revenue reached $11.7 million in March, up 172% year-over-year. This is growth built on genuine enterprise demand, not short-term traffic. This quarter we launched Modellix, a new unified multimodal AI platform. Modellix gives developers a single standardized bridge to leading global image and video models. By standardizing request structures and simplifying model parameters, it removes the overhead of managing many vendor keys and switching between providers. With transparent billing, full call logs, and stable, secure developer services, it turns fragmented AI capability into something enterprises can integrate, manage, and scale. In March, we officially established our Japanese subsidiary, Aurora Mobile Japan KK. This brings EngageLab directly into one of the most demanding enterprise markets in the world. With a local presence, we can deliver a full-journey AI engagement ecosystem in market, combining omni-channel interaction, a customer service AI agent, and frictionless security. Japan is a deliberate step in deepening our local capability where relationships and delivery credibility decide who wins. We continue to broaden our customer base across industries, adding partnerships with well-known enterprises, including Xia Oe, EchoSense China, Blorems, China Post Securities, Hong Kong Ants Asia Forge, and the Shenzhen Stock Exchange. The breadth matters. It shows our products adapt across very different industries and use cases, meeting the digitalization and AI interaction needs of each. In March, EngageLab released Omni Connect, a purpose-built skill for the OpenClaw agent ecosystem. It equips AI agents with out-of-box global omni-channel communication. In practice, an enterprise can build a dedicated agent for marketing, customer service, or operations on OpenClaw, then activate email, SMS, voice, and WhatsApp with a single click through Omni Connect. Combined with user profile data, these agents can run personalized, automated outreach across the entire customer lifecycle. This is the agent-ready direction of our platform, now shipping as product. Now let us turn to the financial results for the quarter. As a reminder, our revenue is organized into two groups. Developer services includes subscription and value-added services. Vertical applications includes market intelligence and financial risk management. Here is the headline. In the first quarter, we recorded GAAP net income, our fourth consecutive profitable quarter, and a strong start to 2026. EngageLab's recognized revenue grew 210% year-over-year and 31% sequentially, with annual recurring revenue of $11.7 million, up 172%. And total revenue reached RMB 93.3 million, up 5% year-over-year. Our core developer subscription business continued to scale, hitting an all-time high of RMB 64.9 million. Net dollar retention for that business held at 103%, and gross profit rose 13% year-over-year to RMB 66.3 million, with gross margin expanding to 71.0%, an increase of 490 basis points year-over-year. This was our fourth consecutive quarter of US GAAP profitability, a strong beginning to the year. We want to be direct about the context. The first quarter is seasonally our slower period, and this year it carried real headwinds. We stayed disciplined, and we maintained profitability through it. That is what makes this milestone meaningful. Profitability is now a structural feature of how we operate, not the result of a single strong quarter. Total revenue was RMB 93.3 million, up 5% year-over-year. The composition is where the real story sits. Developer services grew 15% year-over-year, though it declined 6% sequentially off the fourth quarter peak. Vertical applications declined 19% year-over-year and 25% sequentially on weaker customer demand. We are managing the lines under pressure while we invest behind the parts of the business that we are compounding. Developer subscription revenue reached a new all-time high of RMB 64.9 million, up 21% year-over-year and 5% sequentially, driven by strong overseas growth and rising average revenue per user. Value-added services declined 24% year-over-year and 53% sequentially, simply because there are no major online shopping festivals in the first quarter. That is a normal seasonal pattern, not a change in trend. Vertical applications revenue was RMB 21.7 million, down 19% year-over-year and 25% sequentially, mainly on weaker overall customer demand. Within this segment, financial risk management revenue declined 18% year-over-year, reflecting the impact of regulatory changes in the financial sector. This is the part of the business we are actively working to stabilize. Gross profit increased 13% year-over-year to RMB 66.3 million. Gross margin reached 71.0%, an increase of 490 basis points year-over-year, driven by the larger contribution from our high-margin business. Even in a softer quarter, the quality of our revenue improved. We kept spending disciplined. Total operating expenses were RMB 66.1 million, down 3% sequentially with a stable cost structure. We continue to invest in research and development and in our global expansion, while keeping operating expenses at an optimal level to support growth. Deferred revenue was RMB 173.9 million, up 11% year-over-year, and our 24th consecutive quarter above RMB 100 million. A high deferred revenue balance signals strong customer loyalty, predictable future revenue, healthy cash flow, and an effective sales strategy. The balance sheet remains healthy. Cash, cash equivalents, restricted cash, and short-term investments stood at RMB 142.2 million. Deferred revenue was RMB 173.9 million. Accounts receivable turnover held at a low 42 days, reflecting efficient collection. And net dollar retention for developer subscription was 103%, a sign that customers continue to buy more of our products and services. Alongside our GAAP results, we use two non-GAAP measures: adjusted net income and adjusted EBITDA, to highlight the underlying trends in the business. These should be considered together with our GAAP results, not in place of them. This presentation contains forward-looking statements that are subject to risks and uncertainties. Please refer to our filings with the Securities and Exchange Commission for a fuller discussion. We undertake no duty to update these statements except as required by law. Thank you for your continued support and confidence in Aurora Mobile. We began 2025 by reaching profitability, and we are beginning 2026 by sustaining it while we invest in the products and markets that will define our next phase. We look forward to sharing more progress in the quarters ahead.